Let's bring another voice into the discussion. Bilal Hafeez, Macro Hive CEO and founder, joining us. Bilal, what do you expect?
Well, I expect them to not raise the dots, which I think is a big focus. So there's a lot of focus on the 2023 Fed dot, median dot, whether they'll be raised or not. I don't think they will. I think part of the reason why I don't think they will is because they really want to separate any connection between taper and policy rate hikes. And I think instead the focus of this meeting today will be about the timing of taper and about when they're going to start to talk about taper. Which I think they should, which I think they're likely to bring up in the press conference today.
Do you think that will take the market by surprise?
I don't think so. In the end, that will take the market by surprise. I think instead what would take the market by surprise is if they were to revise up their inflation numbers for this year, next year, and even 2023. That would then imply that the Fed is less convinced about the transitory theme. So I think that will be something that I think would surprise the market. And of course, if they were to raise the 2023 dots, I think that would be a surprise. But I think anything around talking about taper and so on, I think that'll be less of a surprise. I mean, I think most people are expecting some kind of recognition that they are going to start to talk about tapering.
Yeah. It gets very confusing to talk about tapering.
Whisper about
Bilal, just say it very quietly. Bilal, the data at the moment is incredibly confusing, and it strikes me that there's not much signal in the noise. Surely the Fed must want to kind of say to the market at the moment, look, we're going to wait and see. We're going to see what happens in September. And at that point, we should have a clearer idea of what's going on. Why would they make any kind of commitment at the moment?
I think that's absolutely correct. And I think that's why they're going to really try to drag out the taper discussion, because like many other people in the market, the signals right now are very difficult to interpret. We're getting mixed signals. Inflation's picking up. Growth numbers are somewhat softer. But also the other challenge they do have is operationally, they're finding it harder to maintain QE. So if you look at the Fed's reverse repo program, that's really shot up. So there's kind of a real demand to get hold of treasuries. And so that tells the Fed that they need to do something to ease that pressure, which pushes them towards moving towards taper, all those sorts of measures. So there's a few different things going on here. One is the economic uncertainty, but on the other side, there is actually an issue around operationally managing the Fed's balance sheet at this large size.
Obviously, there is uncertainty. As Guy says, there is a lot of noise. And amid it all, we have a market across asset classes that's going effectively nowhere. Is that complacency, or is that just patiently waiting for a catalyst?
Well, I think the story at the start of the year was much more straightforward. We had accelerating growth, we had rising inflation, so there was a clear kind of reflation story. I think right now we're transitioning, to a point where data is starting to be somewhat weaker, so growth deceleration, but inflation's very high. And I think the market finds it very difficult to interpret that, conflicting signals. My sense is I think the market is complacent. I do think that we are likely to see weaker data than people expect. I think most people, are too optimistic on the growth picture for the US for the second half of this year. And I think we're likely to see weaker data. And that will come at the same time as inflation numbers will start to roll over as well. So I think we're kind of lining up for an interesting second half of this year.
So you think a 148 on the US 10-year is about right? And what do you make of the sell-off we're seeing in things like copper? Lumber prices coming down really sharply.
No, that's indeed true. And I think that goes back to this point where markets are giving us lots of signals that we've passed peak growth. Whether you look at the performance of Asian stock markets, which peaked a few months ago, whether you look at things like lumber prices, soybean prices, all of these sorts of things. Now, of course, some of this is driven by Chinese actions to reduce speculation in copper markets and things like that. But overall, the message is that the big growth impulse that we were getting earlier is starting to weaken. So I think there is a message, from commodity markets, and I think that's something that the broader macro community needs to take notice of.
Great insight. Bilal Hafeez, Macro Hive CEO and founder. Thank you so much.